Hi there, welcome to Kneppy Invest. I thought everything was going to go back to normal today on March the 1st, 2024, because reporting season has come to an end. A few stragglers waiting to the last minute to release their financial report, and a few of those companies were put in suspension by the ASX because they were naughty and did not release their financial results in time. However, Life360 put my plans to the sword because we saw a pretty violent reaction from the market. And when I say violent reaction, you might be thinking share price took a plunge, but the complete opposite. And when I say violent, I mean to the upside. Share price increased 40%, 38.5% today on the release of their 4-year results. Now, their 4-year results coincide with the calendar year. So you'll notice if you do look at their announcements, they actually do mention calendar year 2023. So obviously the market loved these results by Life360. For those who don't know anything about this company, if you go to their website, they'll mention the number one family safety and location sharing app. I have heard some absolute horror stories about Life360 in terms of stalking. So you could argue that this is a legalized stalking app, particularly when it comes to parents and their children. So keep that in the back of your mind that there is, or some people do use this particular app for nefarious reasons. However, in saying all that, and I am quite negative when it comes to this particular app, particularly with where we are heading. Now, in saying all that, this app is quite popular because, and the reason I say that, because of the numbers that this company did produce in financial year 2023. So I'm going to talk about Life360 and I'm not going to talk about Life360 in terms of any ethical or moral questions about the company. I can leave that for another video, or maybe not another video, for another time. I'm just going to talk about the financial numbers in this particular video, and I'll leave the rest up to you. So obviously the market loved it. Share price rallied 38.5%. Now, even with that rally, the market cap of this company is now probably $2 billion or so. Because according to TradingView, the market cap of this company was $1.6 billion before this rally. So yeah, the market cap of this company is now $2 billion or over $2 billion. So keep that in the back of your mind. The other thing is this company reports in American dollars and all their financial statements are via the American standards, that sort of thing. So you see GAAP and non-GAAP. Even if you look at their cash flow statement, it's a little bit different from Australians' cash flow statements. So where shall we start in this video? Let's have a start at the financial statements. So actually, no, we'll start way up the top, way up the top, way up the top. So this is sort of like the financial, what's it called? Appendix 4E. And this is section, or the first page. So revenue up 33% to 304.5 million. Our company still loss making, $21.2 million in losses, but they do have an adjusted profit or loss from ordinary activities after tax. That was up 158% to 21.9 million, positive 21.9 million. Now, I'm not the biggest fan of that because that adjusted profit from ordinary activities after tax excludes stock-based compensation, and I'm not the biggest fan of stock-based compensation, and this is a massive thing in America. A lot of these tech companies in America have massive stock-based compensation, and in my opinion, this is actually bad, really bad for shareholders of the company. Now, it might be good for keeping talent within the company, but it's bad for shareholders in the long term because dilution. Anyway, so because of stock-based compensation and non-recurring adjustments, this company went from being loss-making 21.2 million to profitable 21.9 million. So you can just see the effects of stock-based compensation. And I'll talk about that later when we look at the financial results. So let's go back to the financial statements. And the first financial statements is the balance sheet, and they go to the profit and loss statement. I always like to start with the profit and loss statement because we go from the revenue and then we end up with a profit, just like this. For some reason, I like it. I used to start at the cash flow statement and then go to the profit and loss statement and then the balance sheet. The main thing is you look at all three Anyway, so revenue up a lot. So we already know revenue had increased a lot. This company spends a lot of money. So gross profit of 222.6 million. So this company could be highly profitable if they didn't spend a lot of money on research and development, sales and marketing, and administration. So in this year, they spent $101 million just on research and development and $99 million just on sales and marketing. The most important thing here is if you compare 2022 to 2023, they haven't increased their expenses all that much. In fact, research and development went down $2 million. Sales and marketing went up about $7 million. General administration up about $4 million. So overall, their expenses increased by about $11 million. Compare that to their profit. So the gross profit actually increased 74 million. So this company has hit a really important inflection point. Now, if they can continue increasing revenue at this sort of rate and maintain a lid on their expenses, this company is going to be highly profitable in the next few years, particularly if they can continue growing without increasing expenses. Now, this is one of the reasons why the market got excited about this company today, even though technically this company is still loss-making. Let's have a look at the balance sheet. So things I'm looking for here, cash, still $69 million of cash. So more than likely, there won't be a capital raising in the future. And equity at $321.7 million. So a lot of equity there. A bit of a dip from last year, but that's okay at this point. And no debt. That's the main thing. No debt. Goodwill, $133.7 million. I'm not the biggest fan of goodwill. I think some companies overstate goodwill. That's just my thinking. And it's an intangible asset. I prefer to have a look at tangible assets. Anyway, last thing I want to look at is the cash flow statement. So you notice in the cash flow statement is a little bit different than what American or Australians provide with us, because in the cash flow statement, American Australian style, you actually go cash flow from operating activities, that sort of thing. But in the American standard, what they do is they start at the profit or the loss, and then they work their way backwards to get the cash flow from operating activities. Fairly similar to the reconciliation of cash flow to profit we will find in Australian statements, in fact, not Australian statements, but the notes of the financial statement. So maybe note 50. You will see the reconciliation of cash flow from operations to profit, and that's fairly similar in the cash flow statement you find in American financial statements. So they start off with the net loss of 28.2 million and work their way back to get to a company that was actually operating cash flow positive by 7.5 million. Last year, they were operating cash flow negative by $57 million. So why was there a discrepancy between the operating cash flow and the loss? We already know the answer to this. It's stock-based compensation. Stock-based compensation in this particular year was $38.5 million. Some other reasons, depreciation and amortization, 9.1 million. Amortization of costs capitalized to obtain contracts, 2.1 million, so that's not a big issue. And in the bottom half of that section, they go through the changes in working capital. So inventory, accounts receivable, and accounts payable, and they're all actually negative. So that is another reason why this company had a big difference between the net loss and the operating cash flow, is because, first of all, stock-based compensation, and second of all, there was a changes in working capital. All those were negative. Accounts receivable, negative 9 million. Inventory was positive 5.8 million, and accounts payable negative 7 million. And that actually did have a negative effect on the cash flow. So if those were positive, cash flow would have been actually higher. And probably won't look much at investing and financing activities, not much investing activities, a little bit in financing activities, indemnity escrow payment in connection with an acquisition, 13.1 million, and taxes paid related to net settlement of equity awards. No idea what that is, $14 million. So that's really all I want to talk about when it comes to the cash or the financial statements. Now let's have a look at the media release just to see. And the main thing I'm looking for here, I'm not going through the commentary. So So one of the reasons why this company is reporting in American dollars is because this company is San Francisco or American based. Not sure why exactly they're listed on the ASX. That's probably another story there. But anyway, they thought maybe they could find more funding in Australia. I have no idea. Or maybe the standards are low in Australia. I have no idea. Anyway, whatever they've been doing over the last 5 years, it's been really successful. Let's have a look at the key performance indicators. So monthly active users, that's important, up 26% year on year. So we've got, actually it's year on year. So they've got the fourth quarter numbers here and also the financial year numbers, but the monthly active users shouldn't be much difference from the calendar year to the fourth quarter. The other thing is they've divided the monthly active users into different geographic regions. US, Australia, international. Nice increase in US, 19%, but international up 40%. This is a global country, even Australia up 36%. Not sure what paying circles is because I'm not a big expert on this company. Subscriptions up 17% to 2.4 million. Average revenue per paying subscriber or subscription up 17%. So all positive, and analyzed monthly revenue, AMR, up 22%. So key performance indicators all look positive. I've just noticed here they've given us some guidance for calendar year 2024, and here we go to revenue. Revenue up a fair bit. Subscription revenue up, so 59.8 million. Hardware revenue 21.1 million. Other revenue 6.1 million. That's in the 3 months, and pretty good increase from the 3-month period, the fourth quarter of financial year 2022. So everything's increasing. Gross profit. The other thing I want to look at here, gross margins increasing through time. And gross margins are definitely increasing for this company based off 2022 compared to 2023. Gross margins have actually increased from 65% to 73%. Gross margins subscription only, really nice gross margins there, up to 86%. And they talk about expenses here. We know they're sort of keeping a lid on expenses, not spending a lot of money on that. Slight increase quarter on quarter and a slight increase year on year. EBITDA and adjusted EBITDA, I'm not the biggest fans of either, so I'm going to skip right past those. And here we get to the balance sheet and cash flow. So this company was cash flow positive in this particular quarter by $9 million. Last year, they were cash flow negative by only $2.2 million. So it seems like maybe the fourth quarter is a really good quarter for this company. And I did read that somewhere in their literature or their commentary that maybe not the fourth quarter is strong, but the first quarter of every year is actually quite weak. But the company is operating cash flow positive. That's a big step moving forward. And I assume they would be free cash flow positive as well. But again, stock by compensation, 38.85 million. That's a real cost to shareholders. You always got to take that into account. Earnings guidance. Okay, so we have some guidance here. Revenue, 365 to 375, with core Life360 subscription revenue growth of at least 20%. What's the revenue this year? I've already forgotten. So 365 to 375. 365. So fairly big increase from 2023. That's a fairly big increase, bullish increase. Positive adjusted EBITDA of 30 to 35 million. Again, I'm not a big fan of EBITDA. And then they go from positive adjusted EBITDA to EBITDA. And EBITDA, the real EBITDA, is a loss of 8 to 13 million. And positive operating cash flow for each quarter of calendar year 2024. So let's just say that again. Positive operating cash flow for each quarter for calendar year 2024, with the usual seasonal low point in the first quarter, which backs up some commentary I have read about this company that the first quarter is weaker than the other ones. Year-end cash equivalents and restricted cash are between 80 and 90 million. So it looks like, and the company expects to continue being adjusted EBITDA positive. I just hate this. Hate adjusted EBITDA. Yeah. So I'm just going to skip right past that. Anyway, so the market loved this. The market absolutely loved this, and I can actually understand why. This company is growing really quickly, and just look at the earnings guidance for next year. And if this company can keep a lid on their expenses, and I'm ignoring adjusted EBITDA and EBITDA, this company is going to be highly profitable quite soon. The other thing I did before I started recording this video is I just went to ticker, and this is the company's revenue, profit, and gross margins on a half-yearly basis going back to 2018. And this company has, and this does not include the most recent half year, and most of these platforms aren't that quick. And we can say, just based off the first half, 125 million. So this company had $150 million of revenue in the second half of this particular year. So a really impressive growth from $11.5 million of revenue to $150 million of revenue in about 5 years, or just over 5 years, maybe 5.5 years. Company has never been profitable at all. Never been profitable. They got really close in 2020. There was one half year where they were only loss making by 1.7 million. The only thing I look for here is gross margins. Now, gross margins have been dropping, but we have seen a tick up in gross margins the last 2.5 years. So I want to see gross margins continue to climb from here. So that's really all I'm going to talk about when it comes to Life360. For some reason, it doesn't want to get out of the full view there. The last thing I want to talk about is a chart and why I would be excited about this company, ignoring completely the ethical, moral conundrum you might have around this company. And if you want to hear any horror stories about Life360 and the app, all you have to do is just Google Life360 and stalking, and you'll hear a lot of stories from teenagers. Now, there are some good stories about it, but there are also some horror stories about it. And I think eventually that could be a problem for this company moving forward. I don't know. Maybe it will. Maybe it won't. Who knows? I personally, I would never want anyone to be following me on Life360 app. I like my privacy. Let's have a look at the chart for Life360. Okay, and remember, what I'm looking for in a breakout is share price of a company at least a 6-month high. I'm also looking at really big volume on the day where the share price breaks out, and preferably I want to see the breakout coinciding with positive financial news. So we have that with Life360 today. Massive volume coming in, share price is at least a 6-month high, and it coincides with the company releasing their financial year 2023 numbers. In fact, the last time share price was this high for Life360 it's not an all-time high, was way back in 2021. In fact, the share price of Life360 got to $14 back in 2021. So we're not quite at an all-time high, but it wouldn't be surprising to see share price rally from here because of this breakout. Now, the other thing I like to look at is intraday trading. I don't want to see much selling. Share price did almost close at the high of the day. There was a little bit of selling midway through, not quite midway through the day, in the early afternoon, almost midway through the day. Share price got to $10.60 and then rallied in the afternoon, and share price almost closed at the high of the day. So fairly bullish looking at this particular shorter term chart, bullish looking at the long term chart. This is a definite breakout trade moving forward. And I could definitely trade this. So even though I do have questions about the moral and ethical, there are moral and ethical questions about this company, in my opinion, doesn't mean I won't trade Life360. So that's all I'm going to talk about in regards to this company. If you do have any thoughts, any questions, just leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.